Egypt has the highest portfolio of Eurobond offering in Frontier Africa between 2016 and 2021 with a size of $25.7 billion. That's followed by Ghana at $11.75 billion and Nigeria in the third position at $9.66 billion. So what is the global Eurobond market? Why is it a veritable window for Africa's sovereigns? And how do these borrowing impact their economies? Let me talk to an expert in the field. Nnamdi Nwizu is the co-managing partner at Comercio Partners, and he joins me now for a deep dive into this. A good evening to you, sir, and welcome to the program tonight.
Good evening. My pleasure to be here.
What's the attraction for sovereigns in sub-Saharan Africa to raise debt via Eurobond?
So I think we have to look at two things, basically. One is the fact that they can get cheaper debts, cheaper rates of borrowing versus local borrowing. So if you were to look at, say, Ghana, for instance, their local bonds trade anywhere between 18 to 22%. But by the time they go to the Eurobonds market, they can raise debt at 9 to 10%. So saving themselves anywhere between 8 to, say, about 12% in terms of cost. And the second would be access to, foreign currency. So a lot of them still require all sorts of foreign currencies for imports and for other sorts of activities. And for them, Eurobond market is a good way for them to access this foreign currency requirements that they have.
So when you look at how many activities are we seeing across Frontier Africa, sovereign Eurobonds offering in the past year? I remember in December, November, Côte d'Ivoire went to the market. By the way, even though the pandemic was still out there, but was successful, and then came back in January or so and raised a few more.
Yeah, so 2019, late 2019, 2020 wasn't particularly a good year for the sub-Saharan African Eurobonds market. Naturally, with what happened with COVID, and we saw a huge spike in yield. So basically, what we've seen in the last few months has been a bit of an overhang from what was could not have been issued in 2020. So we've seen, for instance, between Ghana, Kenya, and one other country, we've seen them issue roughly about 8 billion in Eurobonds in the last 7 or 8 months. Basically, due to the fact that 2020 was not a good year for Eurobond issuance, so a lot of people had to move their issuance over to 2021.
So when you look at the size of these Eurobond offerings, Egypt at about $5.7 billion, Ghana 11.75, Nigeria still slightly below $10 billion. Nigeria is going to the market now for $6.2 billion. Whether that will be at a single go or at tranches, we'll get details of that. Do you think these SSA economies are borrowing too fast on the market, a global debt market?
Well, interesting question, because if you were to look at quite a number of them, you would see that they have a large size of foreign debt versus total debt. So if you look at Nigeria, roughly about 38% of our debt is external. If you were to look at Ghana, it's about 48% of its debt is external debt, right? And if you were to look at Kenya, it's about 51%. So yes, the fear is there that they might be borrowing a bit too much, because at the end of the day, you need to service these debts. And some of the funds that they borrow actually gets converted to local currency while they're trying to sell to their importers. And eventually they need to find sources to fund this Eurobonds or their foreign borrowings. And we've seen a few countries default. We've seen issues around Zimbabwe, I believe, that had issues repaying their debts. And so when you look at all of that, one has to be careful to ensure that they are not over-leveraged on Eurobond space.
But are there any positive impact, Nnamdi, of successful Eurobond on the sovereign issuer in terms of either credit rating, something like that?
Well, I mean, definitely, because the lower the debt yield, or the lower the coupon set while you're borrowing, then, I mean, basically it's a reflection of how well your country is loved and how your country is perceived generally or globally. So if a country, for instance, if you look at, say, South Africa and look at the rate at which they borrow, versus, say, an Angola or in Nigeria, you would see that South Africa will most probably grow about 3-4% lower. So it basically shows what kind of risk appetite the foreign investors have and the global world has for your country and for your risk, and that definitely counts. And also, let's not forget that for a number of them, these funds count towards their external reserves. I mean, Nigeria has about 10 billion in Eurobond borrowings, and we have roughly about 32 or 33 billion dollars in our foreign reserves. So if you were to check what percentage of our foreign reserves would come from our Eurobond borrowings, you would be talking about 30%.
So here we are set for 6.2 billion Eurobond offering in October as part of the country's wider budgetary borrowing plans for 2021. What's your take on this? Do you think this will necessarily just take the debt level higher? What are the advantages? How do you think this will go?
So first of all, it's the Minister of Finance came out recently to say that it's actually about 3 billion. So out of the 6.2 billion foreign borrowing that they want to undertake, I think 3.2 will be borrowed from other sources, and the Eurobond market will be accessed just for about 3 billion. So do I think it's beneficial? Definitely, because we all know what strains Nigeria is under currently with regards to foreign exchange and trying to fund the foreign exchange market. And we also know that the government currently is on a big expansion drive, railways, roads, and all sorts of things, trying to sort out power. So all of this requires a lot of foreign currency. But yes, the risk still exists of, like servicing the debt. We've seen Nigeria's debt to revenue or debt service revenue roughly at about 72 to about 80%, which means almost 80% of what we earn as a country goes towards servicing debt. So the more debt you take on, the more your revenue goes to service the debt. And then invariably, the more debt you have to take on again to function as a government. So that risk does exist.
Yeah, that risk exists. But again, in terms of how it benefits the market, you talk about the economy and the FX reserves. But what about commercial Eurobond issuers? Is there any collateral benefit, as it were?
Well, there is, because basically you have the sovereign yield curve. What we call the sovereign yield curve is basically where the sovereign or the nation as a whole is able to raise dollars, and people tend to price the corporates within that country off the yield curve. So assuming you look at Nigeria and Nigeria is able to raise, say, a 30-year bond at 8%, then you look at the corporate and say, okay, so what's the corporate risk versus Nigeria? And you decide whether you're going to add a 1 or 2 or 3% on top of that. So it helps sort of set a floor and helps, the better the rates that the country can borrow, then naturally the better the rates the corporate or the can also borrow. So definitely it helps them. But the other fear you have also is crowding out the corporates, because if Nigeria continues to borrow and you have huge debt or huge Nigerian Eurobonds out there, then you might see the corporates struggle to also raise their own debt, because most of the people would rather invest in the sovereign than invest in corporates.
Do we have any corporates on the streets right now thinking about Eurobond corporate offer?
Well, we've heard rumors in the market of access coming out, but we're still waiting for the news to actually hit the market, waiting for them to actually come out and clarify as to whether or not they're actually going to issue a Eurobond. But there have been rumors in the market that we're expecting one from them soon.
Okay, and this is likely going to continue. Do you think the whole Eurobond offering for Nigeria would be, this 3.2, whatever figure is not going to be the last, by the way. So you're looking at further borrowings next year, most likely?
Well, as long as you continue to have a huge budget deficit and we continue to struggle to increase our revenue base, then you're definitely going to see us continue to borrow. In the last maybe about 6 or 7 years, I don't think Nigeria has hit up to 40 or 50% of the revenue target. So your deficit continues to grow. So every year you borrow more, and you realize you end up having to borrow a lot more to even service your existing debt before you talk about carrying out your capital project. So until Nigeria as a whole can increase its revenue base, then definitely you're going to see us continue to hit the market.
Yeah, but again, when you consider Eurobond versus bilateral or multilateral loans, what's your preference, Nnamdi?
Well, it depends on what the multilateral loans, have, what the terms are. If you look at some countries that have complained about taking loans from China and having to give up things like their ports or airports and things like that. So I think the major thing will be what the terms are, but a lot of the multilateral loans definitely come at concessionary rates. So Eurobonds might be borrowing about 8-9%. Meanwhile, in the multilateral sector, you're borrowing at maybe about 3% or 2%. So it definitely comes cheaper, but it depends on who is giving you the funds and what terms are attached to the funds.
The terms and conditions apply, as always. Nnamdi Nwizu, co-managing partner at Comercio Partners. We really appreciate your time speaking to the SSA Eurobond offer market. Have a pleasant evening.